Good morning and welcome to today's webcast. Construction costs. Are you paying more than you should? Before we begin the webcast, I'm going to play a brief housekeeping video.
Welcome and thanks for joining us. We're pleased to present another in our ongoing series of continuing professional education webcasts to help companies and individuals conquer challenges as they plan for what's next. Our presentation will start in a few moments. Before we begin, here are a few things to keep in mind. You can customize how you both view our presentation and interact with the presenter. For better viewing, close all other applications and turn up your speaker volume. You can also adjust window size and placement or enter full screen mode using the controls at the top of the window or dragging the bottom right-hand corner to resize. At the bottom of your screen, you'll see a series of icons, each relating to a different aspect of our session. You can download the group attendance sheet and a PDF copy of today's slides from the slide deck and handouts widget to the right of the slide view. You can ask our presenter questions during the webcast by typing a question in the Q&A window below the slide view and clicking submit. We'll do our best to answer all questions during the presentation or follow up via email. If you experience technical difficulty during today's presentation, refresh your browser by hitting the F5 key. Today's session will offer you 1 CPE credit. To receive credit, you must meet the requirements as specified by the National Association of State Boards of Accountancy. You must attend at least 50 minutes of the session and respond to at least 75% of the polling questions, which we'll ask throughout today's presentation. To respond to a poll, click the button next to your answer. We'll track your progress and alert you when you've earned CPE credit. You can then click the certificate icon in the CPE Progress widget to open a PDF file that you can save to your computer. Don't worry if you can't download your PDF certificate today. We'll email a copy to you in 2 weeks. If you're attending this webcast in a group, you must complete our attendance sheet to receive CPE credit. The attendance sheet is available in the slide deck and handouts widget. Please have all group members sign it and send only 1 sheet per group. Also note that CPE credit can be awarded only to participants registered as themselves and isn't available to participants who view the on-demand version. As a reminder, the presentation you're about to see isn't legal, investment, or accounting advice. We encourage you to seek the counsel of a professional service provider to apply this content to your specific circumstances.
I'm pleased to introduce today's presenters from Moss Adams, Mark Steranka, partner, and Steve Bachetti, senior manager. And with that, Mark, I'll turn it over to you to get us started.
Thanks, Emily. Good morning, everyone. Thank you so much for joining us. We have a great turnout, people across multiple time zones, so good morning or good afternoon. Really excited to have you. We'll be talking about really how you kind of utilize construction audits as really a strategic tool for your business operations. As Emily mentioned, Mark Steranka, I'm a partner in our consulting division, oversee a variety of services, including construction audits. After a few introductory comments, I'm going to turn the presentation over to Steve, and he's going to walk you through the webinar. Steve leads our national construction audit practice and really offers a wealth of information. Start with, because this webinar really is focused on a healthcare audience, just to talk briefly about our healthcare practice. Like most professional services firms, we practice with an industry focus. Healthcare is one of our 9 industry groups that we serve as a firm. It's actually one of the industries that we serve probably most holistically as essential business advisors. That means we're providing, of course, audit and tax services as an accounting firm, but a wide range of consulting services, dealing with compliance, strategy and planning, operations, including lean process improvement, and then specialty areas like real estate and construction. And so we're really pleased to have you and be able to share kind of this facet of our services and activities and potentially challenges you're facing. Capital programs, construction is one of your primary assets. There's certainly been a lot of activity in capital in the healthcare industry over the past few years with a really strong economy, and certainly with the demand for healthcare services will continue into the future, so very timely. Speaking of healthcare, one of the most interesting conferences, there's a little plug for a conference we have coming up that Moss Adams offers, is our annual healthcare conference. It's really, I put it at the top of the conferences that we deliver as a firm. Here's a little information about the particulars about it. You can see it's coming up in early November. Have great healthcare speakers, but one of the really most interesting things about this particular conference is we always have sort of a political debate on the topic or a topic of healthcare or healthcare in general, and kind of a point counterpoint. And so see here, James Carvell and Karl Rove will have a point counterpoint debate, and if you have the opportunity to attend this conference for no other reason to witness that, it will assuredly be very lively and entertaining. And so really it's a great conference. If you have interest, please reach out to our industry group, our marketing folks, and they'd be happy to provide more information, but it's really a great event. And then just transitioning, we're here to talk about construction. We are blessed to have a very robust construction advisory practice, and think of that kind of from two perspectives. One is serving clients or developers or owners that are undergoing construction activity and serving on their behalf, as well as serving contractors who are delivering those projects, where we're either doing advisory audit work for owners and developers towards their contractors, or on behalf of the contractors towards their subcontractors. And really the whole goal of these services is to make sure you're getting the biggest bang for your buck, as the sort of the title of the webinar talks about, not overpaying, but it's the devil's always in the details. We've never had a project that we've worked on where there weren't opportunities for cost recovery, and that can come in many different shapes and sizes and be used by our clients in a multiple of ways. And those services range from working with tightening your contract language from the beginning of the outset to prepping, for example, a contractor for potential audit activities, and helping them really button up how they're executing the project from a contract term standpoint, to then performing construction audits, whether it's at the beginning, middle, or closeout of a project. So a whole set of services that can help make sure that overall those spends are working in the best interest of the participants. So with that, I'm going to turn it over to Steve. Again, Steve leads our National Construction Audit practice. He just has great insights, and I know we have some case studies that I think you'll find interesting. And with that, Steve, over to you. Thanks.
Thanks, Mark. Good morning, everyone. My name is Steve Bachetti, and I'm a senior manager within our business consulting group focusing on construction advisory services specifically. A little bit about our team. We have a great group of experienced personnel that spend their days and many of their nights working on construction advisory work. As Mark mentioned, our major service lines include contract reviews, which I think is a great service that we help both the owners and contractors come up with contract language that's fair, reasonable, and well-defined. Next, the cost and control reviews, where we're doing the compliance audits to ensure that the costs are compliant with the contract terms and not excessive. Change order reviews, and we do performance audits such as the Prop 39 in California. We also do policy procedure work surrounding the capital programs to help support an overall successful program. And as Mark mentioned, a new area that we're getting into is helping contractors with their contract language and helping them get through these audits that we do, because we have such great results on identifying contract language that typically produces gray areas, and that's the gray areas are where there's the opportunities for savings and or audit exposures for the contractor. Our group performs about 50 to 75 projects per year. Our group includes a lot of really smart people, and they are heavily certified. We have the CPAs, the CIAs, the CCAs, which is the Certified Construction Auditors, the PMPs. We have lawyers and CFEs, so we got the whole team to service whatever your needs are. Our team consists of skilled professionals and construction auditors. This is what they do, and each team member is familiar with the different types of construction contracts, the project delivery methodologies, along with the associated risks for each of those and the controls that help support a successful program. Collectively, we've performed hundreds, maybe thousands of these audits, and as Mark noted, they typically result in significant cost savings and performance improvement areas where you can build upon it to improve your program. We do these types of projects for hospitals, universities, governments, tribes, etc. So we get a very good understanding of the different contracts, different teams, what works in different industries, etc. So it's great that we get to work across the industry groups. Our projects typically range from $10 million to $5.5 billion. However, we have done projects as little as $1.5 million that resulted in hundreds of thousands of dollars of savings, which I couldn't even believe myself. But typically the 10 million range is good, 5 is decent, and lower, typically harder to get the cost recovery, but we can help with controls around it. But definitely the 10 million range starts getting to where it's very easy to justify the service fees and the ROI on the job. We work with owners, developers, contractors, construction managers, internally and externally, and we help facilitate productive conversations. It's one thing to have a report, but it's another thing to get the buy-in from the internal team and the external team to ensure that the results are consistent and fair for everyone. Our team understands capital programs as long as construction projects and how to navigate internally and externally, as I noted. And clients who've chosen our group versus others, because there's other providers in this space, is really because our fees are competitive, being a mid-tier firm. We have really smart people that have been at the Big Four, mid-tier CPA firms doing these types of services. We're highly engaged locally, wherever you get. I think most of the attendees here are on the West Coast, and we're a West Coast firm. We are national, but we have offices nearby you, and we typically get support from regional resources so that you get the engagement that you guys need. And we're with you for the entire project. So when we do the reports, it's not, hey, here's the report, let's get the fees. It's, hey, here's the report, here's some good strategic options for you to do that we've seen works in these types of scenarios. And we work to get the buy-in with you guys internally and or externally if it's the cost compliance audit, so that you guys actually get the savings that are in the report. Okay, so in this presentation, we will be talking about how to manage your capital program construction costs and help you identify ways to ensure you are not paying more than you should. Our agenda for today includes common construction program exposures, best practices for addressing construction program exposures, approaches for assessing labor, equipment, and change orders, which are typically high-risk areas. We have a case study on a successful recent project that we did, guidelines for capital program controls, assessments, and audits, expected savings from these types of reviews, and at the end of the presentation, we'll do a Q&A session. And that's one of my favorite things to hear from you guys, to see what your questions are about your project or program specifically. We find that no two programs are alike. You have different people, different contract language, different project size, et cetera. So I'm always interested in hearing what people's issues are. And we typically have either done it or we have a very good understanding of how to proceed so that you guys get the successful results. So again, I love speaking to my computer for 1 hour, but I'd much prefer to talk to you after the fact and get to know you and your program and your team and help you guys however we can. All right, it looks like we have our first polling question. Emily will will facilitate the polling questions, and I'll hand it over to her.
All right, thank you. Our first polling question, do you currently have a capital construction program? And your options are yes, no, or not applicable, or I don't know. And I'll give everyone a few moments to respond. To participate in our polls today, please click the button next to the answer you choose and hit submit. And if you are having any difficulty seeing the polls, you might try refreshing your browser. Everyone, a couple more seconds. And let's go ahead and take a look at the results. Steve, back to you.
Great. So most people, as you'd assume, have a capital construction program. For those that don't, I'm assuming you guys have something coming up, which this will help. And then for those that don't know, just look to see if you have a crane outside, and then that probably means you have a construction program. That's typically how we start our risk assessments. Okay, now into the content. Common construction program and project exposures and cost implications. Here is a list, and I know it's a long list, and the PDF is available for you guys to take home, but here's a list of common program exposures. Each program has its unique exposures, whether it's project size, quantity of projects, contract terms, how good your policy procedures are, the staffing mix, etc. So take a look at the list and see what exposures most likely impact your program and projects or planned projects. I'll go through a few. The first one is, in no particular order, inaccurate program financial records and reports. I often see this as a common area of risk where you have the facilities and development group that know the real project schedule and or budget. However, this reporting information doesn't get passed above. So this discrepancy can cause major operational disruptions and financial issues. For example, we recently had a client where senior management reporting was prepared by the facilities group, and they were going off the original master plan budgets. However, construction forecasts were significantly greater than these amounts. So you had the master plan budgets, and then you had the actual construction spend, and the numbers just were totally off. The information was not communicated properly up the chain or reported. So after our procedures, we helped the client come up with a plan to update the reporting so they knew the true forecasted cost, which helped with their cash flow reporting, and helped them identify avenues to either get under budget via value engineering or other procedures, or secure more funding to deliver on the objectives of the program. Number two, priorities and or project funding was not aligned with the project plan. So again, most people, let's say that you guys have a project or a program, having a clear understanding of how you're going to implement it. Do you guys prioritize your projects and or scopes? How do you communicate this prioritization process with your stakeholders, if you guys have any, or your senior management and end users? This is a big issue, and having a clear master plan with project objectives, budgets, and having, if you guys run out of budgets, what's the next project is critical. So just a short example, we had a client that had a master plan. They updated it based off a facilities assessment, and based off the facilities assessment, the highest need was to update the roofing. And what do you think they did? They built a pool instead. So this wasn't well perceived by the external stakeholders. So making sure that you have the master plan, you're updating it accordingly, and then sticking to it is critical. Next, construction quality issues. The easiest thing that we'll ask when we do the risk assessments is, do you guys have a material specifications guide? So what the kind of the basic question here is your program materials and types of products, is it the Honda Civic materials, or is it the BMWs of the world? So making sure that you have these discussions with your stakeholders, your end users, and will help make sure that you don't run into the issue where you have a project overrun and you have equipment that end users don't want, or is too expensive that doesn't hit the core objective of what you're trying to achieve. Another one, which is on the other column too, a couple down, is the project staffing. So this is an area where a lot of projects have different mixes, whether they handle it internally or they outsource it completely, or a mixture of the two. So we find that there's pros and cons to each, and an even mix is typically good. If you outsource the entire function, you lose visibility and control in certain instances of the project controls. If it's all internally done, making sure that you have the right experience, controls, policies, procedures, etc., to make sure that the projects are successful. So this is a good list of common project exposures to consider when you guys are going through your project and programs to say, hey, how are we addressing these? Other project risks that aren't not necessarily included here are sales and use tax compliance issues, which is a big one, state credits and incentives opportunities, inefficient workflows resulting in excessive operational costs. So have you considered lean type principles at the start of the project? Cost seg. So if you're building something, if you can accelerate the depreciation, this can be one of the best services. If you don't know, reach out to me afterwards and I'll get you connected with the right person. But making sure that you're accelerating the depreciation for favorable tax savings is critical, etc. So there's a lot of things that you can look at. Okay, we touched on this a little bit before. Construction project risk factors. The size of the project and contract can change the risk profile of the project. That is, if a project's only 100K, it should and will likely carry a different risk profile than a project that's $100 million. If your program's utilizing lump sum contracts, procurement controls and change order management are common high-risk areas. If your program has GMP cost-plus contracts, both procurement, change management, and expenditure management controls are high-risk areas. Owner construction experience is a huge risk. Experience in construction programs and related controls aren't typically a core set for healthcare, educational, or government organizations. The key is to select qualified personnel and or auditors or business advisors with this experience specifically to help you identify program risks and help to put together a program to mitigate the common areas of risk that we see for construction programs. Going down a little bit, if you take one thing away from this, I think this is the big one, is making sure that you have a right to audit clause within your contract. If your contract does not have this, it's very easy to get it implemented, so talk with your contracting or legal department. This allows you to set the rules of the game for your construction project and helps promote productive conversations with contractors. If you don't have a right to audit clause with good contract language, it immediately creates a lot of gray area, if the gray area is where the issues occur, that's where the project overruns occur, and that's where if you do the contract review up front, you can mitigate those types of risks. Funding source requirements and compliance requirements. Where's the money coming from? Are you allowed to use it on the construction program or projects? For example, some bonds require that the funds are only for specific things, and you have to only spend the money on those types of things. And if you spend it on something that's non-compliant, if you have public stakeholders, that could result in a newspaper headline, which you do not want. So making sure that you understand what the funding source is, where it's coming from, what are the requirements, et cetera, will help make sure that you have the cash available for your project and then it's compliant. Schedule impact. Understanding your schedule needs and ensuring contracts are procured and managed accordingly is critical to prevent operational issues and cost overruns. A good way to manage this is via the change orders. And what we see this way too often is if the change order is not your fault, it doesn't extend the schedule, the project schedule. They're adding general conditions types costs like project management, labor, et cetera. But if you take a step back, if there's no delay, it's not an owner-initiated type change order, then the project management costs were already included within the original estimate. So making sure that you take a step back on the change orders, make sure you have the right itemized details, et cetera. We'll get into it a little bit in more detail, but schedule impact I've seen being a major issue. And contracting competition, as Mark noted earlier on, it's there's a lot of cranes, there's a lot of construction activity going on. Making sure that you're obtaining qualified contractors at a fair price is getting more difficult. So you need to make sure that you're reaching out to a pool of qualified contractors. You're getting hopefully at least 3 bids to making sure that you're getting a competitive price. And from there, making sure that you have good contract language to control and manage costs is critical. All right, controls and best practices for addressing construction program and project exposures. It looks like we have another polling question to make sure that you guys aren't falling asleep. So Emily, can you help out with this one?
Yep. Our second polling question, what is your capital programs or projects' most significant risk? Budget, schedule, scope or change orders, compliance, all of the above, or none of the above? And as a reminder, if you would like to receive CPE credit for today's webcast, you will need to respond to at least 3 of the 4 polling questions. I'll give everybody a few more seconds to make a selection. And let's go ahead and take a look at the results. Steve, back to you.
Okay, let's see. Budget, course, schedule, and then change orders, and then all of the above. Okay, so all of the above was as you can see, the most common answer, which is common. Most people don't want to pay more than they should. They want to make sure they get what they want when they need it. Change orders and scope creep is a very common exposure where people often feel like they're paying way more than they were originally intended to, which can be having good contract language is critical and making sure that you have the right details. We'll get into that a little bit further into this. Compliance. Yeah, so we got a great mix here, so that was good. Okay, so questions you should ask about your controls. When we get involved with a new client, and you guys can use these questions too. These are all really common questions and nothing's too complicated. And this will help you identify potential areas of risk. So I want you to visualize your program, your policy procedures, your current staffing, the documentation that you know where to get it, etc. And asking these types of questions will help you find the areas of risk and potentially some areas for improvement. So these are the questions I'll ask where if you have a contract, whoever's in charge of that function, you'd say, how do we know that we're getting favorable pricing and what are the controls around that? For project design, construction budgets, and spending, we had a client that they didn't have a good design control, so they kept changing the design when they had pre-construction contractors on site, and they had significant design cost overruns because they kept changing the design, which impacted the schedule, and you kept all the third-party vendors hired throughout the process. So making sure that this is all clear and defined is critical. Managing and monitoring project cost, schedule, and scope performance. What do your payment applications look like? And that's the invoice that you receive. Are they fully supported? And are they compliant with your contract terms? How do you know that? What's your latest project schedule? And has it been reviewed and approved by appropriate personnel? So is everyone on the same page? Audit and validation of contractor charges, contracts, etc. So who's reviewing the cost? Who's lining up with the contract terms? Are they experienced in the area? We often hear people say, oh, we got a project manager who does that, and we have an owner rep who does that. But asking how they do that and walking through their process is very easy. And if it doesn't make sense to what they're doing, or if your payment application is only 5 to 10 pages and not hundreds of pages, then it's a good potential area where you could dig in a little bit further. So these types of questions we go through whenever we start with a new client to get a better understanding of their program. Okay. Construction project risk identification and controls. So here, there's a lot of words, and we'll go through a couple of them, but these are the common risk areas we see on a project specific. So labor overruns, that's the risk. So some of the controls is making sure that they have detailed timekeeping documentation of the hours worked and understanding what the rates are. Excessive change order costs, which we'll go into a little bit more detail as well. Making sure that you get the right approvals, making sure that your change orders have the itemized backup with the compliant fee markups, et cetera, to making sure that they're appropriate and it's actually a true change order that you can't potentially do some pushback on. Cost management issues and surprises. So this is critical, having your team understand what the cost estimates are and making sure that your financial reporting is per best practices so that there are no surprises. Excessive rental equipment costs. This is the third area that we'll touch on a little bit later in more detail, but if it's third party, it carries its own risk profile versus if it's contractor owned. So we'll walk through some of the steps you can do to help manage those types of costs, and et cetera. So another one, I'll skip to the bottom because this is a big one we're currently working through right now, is understanding your insurance and the basis of allocation. So we recently had an instance where the contractor was charging subguard insurance, and subguard insurance is to prevent it's an insurance policy if a subcontractor defaults on your project. So the cost basis for this should be the enrolled subcontract population, which is submitted to the insurance policy provider. So they were applying the insurance rate to the total cost of work, which is not what the contractor's getting charged. It's not what they're enrolling into the program. So making sure that you get the subguard enrollment forms as submitted to the insurance provider can help you ensure that you're not paying excessive insurance. So that's a common area that we also find that they do the markups on the wrong cost basis per the contract terms, which on some of these projects, if it's $100 million and you're off a percent, it could add up real quick. The right to audit clause, which I noted before, it's based on all the risk controls we just went over. So you may be asking yourself, where do I start? How do I, after the webinar, what's the best first next step? And I think this is the best place to start, is making sure that you either have it in your contracts, you're going to have it in your contracts, or if it's in your contracts, when are you going to execute the right to audit. So the right to audit clause can help you mitigate project risk and program risks. Knowing your costs and ensuring the costs are compliant with the contract terms is essential, and then timely review of the cost documentation can prevent overcharges and can help manage cash flow for your organization. And then just one other note here is if you guys have the right to audit clause, making sure that you exercise it before retention is paid, which is the final payment to the contractor. We find once you have released the retention, it's a little bit harder to get the money back and or facilitate a smooth and efficient audit on the contractor cost. Okay, approaches for monitoring labor, equipment, and change orders. So we'll go into detail for these three common areas of risk that we come across too often. So we have the two methods, the actual cost and stipulated rates, and the two types of labor charges that we see on a project: salaried, project management, hourly, craft labor. Actual cost is preferred because you'll know the true cost of each employee, and there's not a hidden profit within the charges to you. However, stipulated maximum rates are practical as long as they're market competitive. We find if there's no profit in the labor, there's typically a higher likelihood that the labor charges by the contractor will be more efficient, as there's not a profit center. So if you have rates and there's profit, then it's to the advantage of the contractor to charge labor because there's profit within that. Another item is making sure that if you have the stipulated rates, to ensure that you clearly define what's in the burden. For example, do the rates include holiday, sick, bonus, etc.? This can add up significantly. We've seen holiday included within the rates, but also charged the project, resulting in hundreds of thousands of non-compliant charges. So making sure what's included in the rate and what's not is critical. Project management labor is typically salaried personnel, so limiting their hours to 40 hours can help prevent overcharges to the owner. So if they're working 40, or if they're working 80, but they're capped at 40, then you shouldn't be paying the rate at the 80. Another one is labor burden. They are charging you labor burden, the rate should decrease over time, and for overtime and double time because the caps have been reached. And also another big area that we often see is having your contracts clearly define on-site versus off-site can help prevent excessive charges to you. So if people are working 14-hour days, they're driving back and forth, which is 2 or 4 hours each way, making sure that they're not charging that to you. So they shouldn't be getting paid to be listening to cool jams in the car. Rental equipment. Another high-risk area that we talked about before, third parties. The higher risk area is the contractor-owned equipment that we've been seeing from these audits. However, third-party rentals can pose a significant risk. Equipment needs and plans should be well understood and documented prior to the project commencement. And a cost-benefit analysis should be performed on the major items to making sure that you're not getting charged more than what it would cost to purchase the equipment. So having good documentation up front, a clear equipment plan, et cetera, is critical, and that can be applied for both the contractor-owned equipment and third-party equipment. The monthly rental rates should be stipulated and should not exceed a percentage of the published rental rates or local prevailing rates, and capping the total rental payments as a percentage of the fair market value of that piece of equipment can help save a ton of money. Defining minimum reporting standards is a great practice, and the minimum reporting standards should include things such as monthly usage, detailed equipment information such as what is it, the model number, the purchase price, the purchase year, the condition. So what we'll often see is they purchased an equipment 20 years ago at $10,000 and they still have that same replacement value. So if you actually get the equipment information and maybe you go on site to look at the equipment specifically, you can figure out the true replacement value and making sure that you're not exceeding that. So that's a great control that you guys can do. And making sure that the equipment charges should only be for equipment that's on site, active, needed, and with your approval. So you don't want your project site to become an equipment yard of just a bunch of equipment that's not being used, but they're charging it to you. So having good controls and reporting around this will help you prevent excessive charges. Rental charges should exclude maintenance, but if it's included, you should define what type of maintenance. You don't want people, if it's a contractor-owned truck, you don't want to be paying for a transmission change. So if it's routine maintenance, have it well defined, but preferably get in the contract that the rates are the rates and all the maintenance cost is not your cost of work. If it's computer and software, making sure that the computer and software are directly related to your project. We've seen many times where it's they're charging corporate software costs to the project, and unless it's directly associated with your project, if you have good contract language, you can get it defined as an indirect cost, which is included within the overhead and profit. So it's not a compliant charge. And making sure that everything's fully supported and caused by the project. So if it's indirect, it's likely already included within the overhead or profit. Great. So change orders. The typical process includes request for information, a change order request, change orders. Supporting documentation is required, or hopefully required by your organization, to make sure that you're not getting overcharged. This goes for both increases and decreases to the total GMP. Contract language should be added to set minimum reporting standards to prevent potential excessive contract values. And as we noted before, understanding the scope of the change is critical. So if it's owner initiated, then you guys should understand if that's going to impact schedule, what's the total cost, is that in line with your master plan or project objectives, etc., and why wasn't included within the original document. So making sure that the change orders are truly owner-initiated and that you guys have thought through that's what you guys want to do. So if it's a design error or a contractor repair, you guys should not be charged with that, especially if you have good contract language that supports that. The change orders need to be approved by all appropriate personnel, so the owner, the architect, and the general contractor. And as I noted before, be on the lookout for general conditions if the schedule has not been changed. So if as I noted before, if the schedule did not get changed, they shouldn't be adding project management type charges to the change order as a markup or as a stated amount because it's already included within the original budget. And I think the easy one for change orders, having good contract language is the easiest. But when you guys get the change orders, making sure that you guys have all the itemized backup, making sure that it's actually being incurred on the project, making sure that the markup percentages applied by the contractor and the subcontractor are per the contract terms. And most often, contracts have maximum change order markup amounts. So making sure that if it's the contractor sub, that the total fee doesn't exceed the cap, et cetera. So without the itemized backup being provided or reviewed by your team, you might get excessive change order values, which is not good for your organization. Healthcare case studies. So we'll go over just one recent one. It was a $120 million hospital medical center expansion in the West with GMP subcontractors. So they had the right to audit clause at the contract and the subcontractor level. We performed a midpoint, and we're currently in progress on the closeout. And we work closely with the project and facilities management. And the only reason we put who we work with here is I find one thing is a common issue for other firms or the approach people trying to do this internally is the goal of the audit obviously is to quantify non-compliant charges and if there's some control gaps, identify them, et cetera. But we find often that the project and facilities management team don't like to be audited because it doesn't look good for them. So making sure that you have the productive conversations before that, yes, it is an audit, but the end goal is to making sure that the organization is getting a fair and reasonable price. And if we do come up with the observations or the findings, it's an opportunity for savings. So let's work together as a team to make sure that we get the best result for you guys. So making sure that you have a good relationship with both the facilities team, the accounting and finance team, and hopefully the internal audit team. We love those people. Having a great relationship with all three really promotes productive conversations and a good team atmosphere to work together to get the best results. So on this specific project, we identified $3 million of non-compliant charges, which we're going to validate now and make sure that the issues that we noted were credited or are being addressed per management's recommendations. One of the bigger issues was one of the subcontractors, when they gave us the labor cost population that we reconciled to the payment application, they had rates that were based off the latest and greatest rates. So they had different rates per each year, and they were using the current fiscal year rates and retroactively applied it. So just by putting the right rates for the right periods per their contract, because they had good contract terms, we were able to identify $500K of excessive and non-compliant charges. Another big area that we found was related party equipment and job supply vendors, which weren't clearly noted up front. So when we were going through our sampled procedures, we look at the documentation that's provided to us. We do vendor checks to make sure that they're not related parties, et cetera. And if they are related parties, then it's really an internally generated invoice, right? So if they're creating their own invoices, then we don't really know the true actual cost. So there's a couple things you can do. You can ask for the actual cost backup to support the unit measure rates that are charged to you, or you can, what is the more often route that we see is you identify it, and then you can go through some procedures to figure out the average markup across the board and have a good negotiation. So you can go through the route. If it's job supply, there's a lot of different types of job supplies. You can do an audit procedure to get the exact unit measure. However, we find that do it on a small sample, do a negotiation, it can result in big savings. And then one thing that's not on the slide that I think is an easy win is just getting the cost population, the detailed cost population. What we often see is the payment applications include the schedule of values, which is very summary and not from the actual reporting system. So just I think a lot of the people on this call are accountants. Just let's put on your accounting hat, ask for the job cost report from the contractor system, reconcile it to the payment application with the appropriate markups for the contract, and just see if it ties out. I've come across, and this is not even, I can't even make this stuff up, but we've had a project that we just did that, and we're able to identify $3 million of just charges that they billed in excess of the actual charges. So it's a really easy thing to do to set the stage for sampling and just making sure that they're not overbilling. Okay, guidelines for program and construction, project controls, assessment, and audits. And look, we have the third of the fourth question. Emily, do you want to do this one?
All right. Our third question, do you perform program and or project audits and assessments? And your options are yes, no, infrequently, or not applicable. And for those of you that would like a copy of today's slide deck, you can download them from the folder that says slide deck and handouts to the right of the slide view. We'll also be sending the slides via email after the webcast. I'll give everyone a few more seconds here. And let's go ahead and take a look at the results. Steve, back to you.
Great. Okay, so we got a good mix. We got yes as the top. And so if you guys are doing it, great. The one thing to make sure is making sure that the people that are doing the audits are qualified in that area, and then understanding what exactly they looked at, what their procedures were to make sure that they're doing kind of the basics that we stated, like reconciling the cost population, what were the underage, overage from that, how they sampled, did they get all the different cost types, so labor, direct cost, materials, equipment, change orders, et cetera, and then understanding their exceptions and whether they projected those, so that it's comprehensive. For those that are not, if you guys have a construction project or program, I'd ask yourself, why are we not doing this, or at least starting the conversation on whether it can apply to our program, if it can add value. So, and then you can check to see if you have the right to audit clause on your contracts, which is a good first step. And for those that don't do it often, if your projects typically depends on your project size, but if your project only lasts 1 or 2 years, making sure that you do it within that time frame is good. Okay. Assessments and audits. So like I was stating, this can be done internally or externally. I'm obviously biased thinking that we're the best in the West, which I really do think that. But just having outside parties perform these, they're objective, they're independent, and their goal is to keep if there's non-compliant charges, that it's not getting charged to you, and to support the overall program success. So a lot of people say, well, when should we do this? So depending on your program or project, obviously earlier is better. The contract review service that we provide or other people could provide is, I think, a great thing at the project inception, to have those conversations up front with the team, to making sure that the contract is not gray, it's well-defined, it's reasonable, etc. We do, depending on the project size, we typically, sometimes it's way more than this, but typically if it's a fairly big project, we'll do a project inception report, we'll do a midpoint, and we'll do a closeout. For some of the bigger programs that we've done, which have been in the billions, we did quarterly audits, which was a lot, but they needed it. The project inception, each of them has its own kind of a benefit to it. So at project inception, it's a good way to making sure that the contractor billing procedures are well documented. If there's any issues up front at that point, you can talk with the team, facilitate productive conversations, get the minimum reporting standards set at that point. So when you do it at this point, the numbers are typically kind of small, sometimes really big. We've had huge findings at the project inception audits, but typically they're large numbers, but not huge. But the goal there is you have the productive conversations at that point, so that when you get to the midpoint or the closeout, it doesn't become millions of dollars. It's easier to start talking about $10,000 on what the expectation is, what the billing requirements are, is it compliant or not compliant, because they're small numbers. But when they start growing to hundreds of thousands or millions, it's a different game. So what does the audit cover? It covers operation and project delivery, so cost and schedule, reporting, etc. The cost charges to you guys. It includes controls. So when you guys have observations, it's really how do we improve? It's focusing on what can we do to prevent this going forward. The project is typically multi-year, or could just be ongoing for a lot of these hospitals that we work with. So it's having a continuous improvement mindset so that you better your program now and support the overall success of it. And what are the benefits? So the control improvements, great. Often policy procedures are developed or fine-tuned to be in line with best practices. Cost recoveries, which are my favorite meetings to go to, because people typically like you very much when you say you've saved $1 million. Those are definitely my favorite meetings, which we have quite a few of those. And then stakeholder visibility, which I think is critical, making sure that the facilities team and the accounting team are working together, making sure the financial reports are including the best practices types of reporting, so budgets, changes from budgets, master plan, budgets, forecast, cost, etc., to making sure that there's enough information in there to actually understand what the program's going on, what's going on in the program, and then having appropriate narrative so that you don't have to go through 60 pages of cost detail to kind of figure out what's going on. So depending on the level of people that are reviewing it, you have to tailor it, and you can easily find some best practice guidelines to making sure that the right information is going to the right people. Okay, anticipated program assessment and audit results. We pretty much went over this. So again, I'll just kind of go through a couple of them. Prevention of problems and early detection of risk, which I think is huge. They're a lot easier conversations to have. Tighter internal controls and project controls, which I think is great. I think that's the overall goal. As I stated, a lot of these programs, they're always in construction, so doing these types of audits, have an outside party come in and provide their expertise, or maybe you guys have it internally, but having a continuous improvement mindset, updating policy procedures accordingly, and just facilitating productive conversations is critical. Okay, expected savings from utilizing an outside cost auditor. And we have our fourth and final polling question, so I'll turn it back over to Emily.
All right, thank you. Our final question. Have your audits and assessments resulted in significant cost savings and or performance and control improvements? And your options are yes, no, undetermined, or not applicable. And once you have completed all CPE requirements for today, you will be able to download a PDF of your CPE certificate from the CPE progress window to the right of the slide view. And if you have any difficulty downloading your CPE certificate, we'll be sending them via email within the next 2 weeks. All right, let's go ahead and take a look at the results. Steve, back to you.
Awesome. So we got lots of yeses, which is typically the case. Undetermined, I think, let's see, for the no's, I think then making sure that you understand who did the audit and that they're qualified to do it and understanding their procedures. So did they go to the contract language? I have seen audits performed where they just validate that they have the conditional lien releases and that equals the total payment, and which is evidence that the money was paid to the people, but that's not necessarily digging into the details of what does the contract say, what are the actual costs and documentation supporting that. So it's very unlike I haven't seen very many audit reports that don't result in some sort of control improvement recommendation or cost savings. For the undetermined, it's kind of the same approach for the no's, is understanding who did it, what did they do, what's the results of it, did they project it appropriately, et cetera, to making sure that it's comprehensive and that the audit report. And I think a lot of the times people think the audit, it's going to look bad for them, but I think the audit is really a good tool for everyone to understand understand the project risk and coming up with a great strategy as a team to support the overall success. Okay, so here are some of the program and project audit successes. So as you can see, the numbers can be very big. So we've just provided some of the examples of types of things that we've come across that our reports have been able to identify. So go Moss Adams team. And then how to leverage. And we're getting close to the end, so I want to make sure we have enough time to go through a couple questions. Provide best practices for construction program and master planning controls. Can provide best practice policy procedures for successful programs. I think policy procedures are often an area that people miss, where they think certain things are being handled by certain personnel, but if it's not defined, then the wrong types of approvals are happening. For example, if the contractor is a cost-plus contract and they're doing a self-perform contract, if you have an assistant project manager approving a fixed-price self-perform contract, that's probably not appropriate. So if you had the policy procedures that define that type of stuff, you wouldn't get into a situation like that could be more difficult to navigate. And then next steps. The next steps is you guys give us a call and we'll help you out. Just kidding. Actually, that was just kind of a partial joke. But for new programs and projects, utilizing an advisory support service to help negotiate favorable pricing and contract controls is great. If you have someone internally, making sure that you understand what they're going through and their methodology within that is great. If you have projects in process, conducting a construction project risk assessment to determine which common construction risks are most relevant to your organization is great. Just because you have a contract set doesn't mean you can't start asking questions in the contract language and billings that result in the gray areas to start the conversation with the contractor of, hey, this is gray, this is let's get this figured out now so this doesn't become a bigger issue. I think those are conversations that are good to have early on so that they don't become big issues. The bigger issues are harder to navigate. Assessing the staffing controls you have in place to making sure that you have the right people doing the right types of functions for your program, and maybe conduct a detailed assessment of the expenditures for contract compliance. So just because someone's done a project one place doesn't mean it's applicable for this. Every contract is different. They have different contract terms. So it's good experience to have it because you've seen it, but you basically have to start at the starting point, which is the contract, to see what are the rules of this game, how are the costs lining up to these contract terms, and are these compliant, not compliant, or undetermined. So just looking at the detailed expenditures for contract compliance is a great next step. And then we'll go to questions. I think we only have a minute, so if you guys provided questions before I turn it over to Emily, I'll reach out to you to help to answer your question if we don't have enough time.
All right. So as Steve mentioned, we are right up to the top of the hour. If you had questions today that we did not get to, we will do our best to follow up with you after the webcast. And Steve, I would like to thank you for a great presentation today. As a reminder, if you attended today's presentation in a group and would like to receive CPE credit, you must complete the group attendance sheet found in the slide deck and handouts window to the right of the slide view. If you participated as an individual and met all certification requirements, your certificate is available to download now in the CPE progress window to the right of the slide view. I'll keep the webcast console open for a few minutes to give you time to download your CPE certificate. A copy of your CPE certificate will be mailed within 2 weeks should you have any difficulty downloading it now. And here is a link to an online survey where you can provide feedback for today's presentation. Please take a moment to complete this survey as your feedback is very important to us. Thank you for joining us, and we hope you'll join us again next time.